Hi, this is Yahoo. I'm Macro Trader. It's November 1st, 2025, 12 to 7 a.m. Japan time. The Nikkei is currently trading around 52411, showing a remarkable strength. Earlier, there was reports that U.S. military conducted airstrike on Venezuela, but the market impact seems limited. Even crude oil barely reacted. The Nikkei remains straight. Today's volatility index is 28.22, still elevated, which means the market's energy is alive. I won't go too deep into the market review tonight. I want to focus on something bigger, layers. My sense is yes. Japanese and the US markets are now starting to price in the beginning of new era, the layers revolution. Recently, Japan and the US have moved forward on joint development to Minami Hiroshima, and the conversation between Prime Minister Takaichi and President Trump was likely the key trigger. And since then, we have entered what I call a valuation adjustment phase. Much being flows are probably coming into Japanese trading and resource-related stocks, especially manufacturers with export exposure. That's where I think the falling order are picking up. So here's what's likely happening inside the desk. A broker receive a huge buy orders, which means they are temporarily short gamma, and to hedge, they are buying futures. At the same time, institutional investors expecting higher price are buying call option, brokers and sell those calls and hedge again by buying more futures. So the market keeps building a stronger long structure. Meanwhile, those who missed the rally are buying puts, thinking this must be the top. But these puts are expensive, the volatility is high, so brokers sell them a corrected premium and keep their overall book a long base biased. So the result, a market with insurance everywhere and momentum upward. That's exactly the kind of structural melt-up we are seeing now. Now, let's step back. This is not just about currency or short-term policy. It's structural. It's about resource. Think of the US and shale gas. The story began in the 1990s, gained attention in the earlier 2000s, and only after 2008 did technology and the pricing coverage. By around 2016, the US became a net exporter of natural gas, a true energy power. And the one who benefited most from the transformation is Donald Trump during his past presidency. Now, apply the same logic to Japan. Japan's rare earth story did not start yesterday. It began in 2001 when deposits were discovered near Minami Hiroshima. Researchers at the University of Tokyo pushed technology forward, and by 2019, extraction became technically feasible. Now, 7 years later, we are at the joint development stage. The roadmap looks like this: 2026, trial extraction; 2028, commercial readiness; 2032, full export capacity. Estimate vary, but 1.6 million tons of rare earths are almost certain, making Japan potentially the world's third largest holding. That's massive. So Japan, once known as a technology nation, as a tourism nation, the wealth management nation, is now entering the stage of the resource nation. And this could be the true national strategy and the Takaichi administration. If American took 20 years to master Shale, Japan 2011, 2031, 30, timelines fits perfectly. And here's the key insight. A resource-backed nation can issue currency confidence, fund aggressive fiscal spending, and for private sector expansion. That's how variation March pre in the US PBR is around 4 or 5x. Japan is still at 1.7x. You can see the upside. And this time, the variation lift is not financial engineering, it's structural, backed by real assets, balance the sea. That's what the market is beginning to pricing. Even the BOJ decision not to hike rates might reflect quiet confidence that the yen's foundation shifted from reserves to resources. Is that true? They can run physical expression without fearing endless yen depreciation. When Goldman Sachs says the yen could move back to 100 yen and Kuroda hints at 120, 130 long term, I think first they really implies this. Japan's currency and equity strength will both be backed by rare earth qualitative, rare earth energy. This might be the return of Japan's number one, a structural renaissance, not hype. For decades, traders believe high volatility means the top of its name, but now high volatility might mean the future expanding. We are in a new paradigm, a market rewriting its own logic. November and December could be decisive. If we catch this wave right, it could redefine 2025. This is a whole cycle for turning to the long put strategy. Follow the channel for deeper take on the macro structure and action. See you tomorrow.